to the deputy lead of the department. Uh, from Pioneer Cement side, we have Mr. Habibullah Khan, who is the group chairman. Along with him, we have Mr. Ali Khan, who is the chairman of Pioneer Cement, and we have Mr. Waqar Naeem, who is the company's CFO. Without any further delay,
Recording in
I'll
progress.
hand it over to the management, who will run you through a presentation, which will be followed by a Q&A session. Over to you, gentlemen.
Thank you, my friend.
Stop reducing. What is wrong with these people?
And this construction and maintenance is all, we have taken the responsibility of the construction and maintenance of these roads as well. In healthcare, we are maintaining medical centers in our plant, and we are facilitating surrounding areas. In addition, public dispensary in Chinky Village also, we are supporting them, and financial support to TB Center Foundation and other health safety environment equipments we are providing our staff and other people. As far as the industry performance dispatches, industry dispatched 45.24 million tons against 44.5 million tons in 2023, and Pioneer dispatched 2.3 million tons in 2024 against 2.7 million tons in 2023. In recent quarter, we have sold 463,000 tons cement against last year's 6,100 ton dispatches. In both periods, our total dispatch is less than previous years. Like last year, we are short by 12.65, and this quarter we are short by 2.96.
Okay. Why is this okay is not going away, Ali?
These are the sales volumes. In 2020, we sold 1.7 million tons when we started our line 3 production. In 2021, we sold 3.3 million tons, and 2022, we sold highest quantity of cement is 3.388 million tons. After that, our sales squeeze according to the market, and we sold 2.7 million tons. Then in last year, our sale was 2.362 million, and this year it's just a quarter, so it's 463,000 tons. So in last 2-3 years, our demand is as demand is squeezing, so accordingly our sale is also reduced, because we are focusing on the nearest markets, which from where we can get maximum retention. This is a graphical representation of balance sheets. In 2024. Our total assets were 85 billion rupees, represented by shareholders' equity is 22.3 billion, revaluation surplus is 23.358 billion, totaling 45 billion, equating per share value of 201 rupees. Our financial payables were 18.63 billion, and debt liabilities are 21.343 billion. In 2023, our total assets were 87.155 billion, represented by 16 billion of shareholders' equity with the revaluation service reserves of 23.6 billion. Our financial liabilities were 26.52 billion, and debt liabilities were 19.682. So in both years, financing and payables are reduced from 26.9 billion to 18.063 billion. This is a red trend starting from 2020, and we were reporting long-term debt 20.62 billion, and it went up to 21.53 billion with a total debt size of 26.79. So 2020-21 was the highest year of debt reporting, which is gradually reduced till today. Or in this quarter, debt reduced to 9 billion rupees from 26.79 billion. As of today, when we are talking, our further debt further reduced to 8 billion rupees. So management is focusing to repay our high cost debt. Please next. So it's a graphical representation. It's our gross turnover 49.235 billion, is slightly less than the 2023 figures of 49.33 billion. It is about 0.2% reduced, less than last year. But as far as per ton is concerned, our sale price increased from 18,245 rupees to 20,845 rupees, which is 2,600 rupees higher than last year. And the net turnover was 35.51 billion against 36.165 billion, which is 2% less than the 2023. But as far as per ton is concerned, our retention increased from 13,375 to 15,038 rupees, which is 1,663 rupees higher than the 2023. Our gross profit increased by 25% as compared to 23 figure. We reported 11.763 billion against last year's gross profit of 9.409 billion. Again, per ton basis, we achieved 4,980 rupees as gross profit against last year's figure of 3,480 rupees, which is 1,500 rupees higher than the last year. As far as EBITDA is concerned, we reported 14.143 billion against 11.588 billion of 2023, which is 22% higher than the last year. As far as per ton is concerned, our EBITDA comes 4,554 rupees higher than last year of 3,287 rupees, which is a gap of 1,266 rupees. So as far as per ton performance, we have achieved better growth against overall absolute terms. Next. So it's a breakup of profit after taxation, and we reported 2024 8.383 billion against 5.732 billion, which is 46.2% higher than the last year. As far as profit after taxation is concerned, we reported 5.176 billion against 2.611 billion, against almost 100% more than the last year. And per share EPS went up to 22.79 per share against last year's figure of 11.50 rupees. Our composition of cost of goods manufactured went fuel and power 63.75%. Second highest was packing and raw material, which is 16.34 billion, and depreciation 12.12%. Our depreciation is quite high because last 2 consecutive years we have to revalue our assets as far as international accounting standards required. So our depreciation is quite high. Yes. This is a try to represent this return of shareholders in this graph. Since commencement of our new production line, the company has prioritized debt repayment. So after settling most of the debt, the board has declared highest dividend payout this year, which is 65.82%. This reflects the commitment to maximize the shareholders' values. And against EPS of 22.79 rupees, our highest share price went up to 1.72.5%. But subsequent to 30th June, I think this per share price went more than 215 rupees. Our breakup value as of 30th June was 201 rupees, and dividend payout was 15 rupees, as I said, 65.82%. We made a major change in fuel mix to achieve these figures. In 2024, we consume maximum local coal based on Dara. Last year, when we started local coal, our yearly local coal consumption was 50.82%. That went up to 74.81%, and we are still maintaining and even increasing this composition of local coal. Against last year's consumption of 1.46.8%, we reduced it to 23.72%. As far as power mix is concerned, We have squeezed most expensive power supply of WAPDA, which was 30.46% in 2023, which is reduced to 14.51%. Our main focus remained our coal-fired power generation, which was 45.84 in 2023, and in 2024 we produced from coal-fired power 59.55% of our power demand. Again, WHR, which is almost a zero cost power, that went up to 25.94% against last year's figure of 23.70%. It's a graphic, it's a tabular representation of overall industry performance of 2024. We have reduced our sales values by subtracting selling expenses on per ton basis. This chart represents per ton figures. Pioneer showed a per ton sale of 14,945 rupees. Highest was Maple Leaf, which is 15,620 rupees, and second highest was Fuji, 15,086. Since we have maintained our cost of goods sold, our GP is, if I'm not wrong, is the highest figure in the table, 4,887 rupees, and second highest is 4,440 rupees best way. Going down to other income, again, there are market players who are reporting highest other income like Art and Lucky, Maple, DG. After securing these figures, our profit after before interest and tax is 4,737 rupees. Since our finance cost is comparatively high in the market, so we secure a profit before taxation 3,549 rupees. After subtracting taxation, our per ton profit after taxation remained 2,191 rupees. If we evaluate EBITDA per ton, then in general, our EBITDA is second highest, 5,996 rupees, but this includes other income as well. Highest EBITDA reporting company was Art, which is 6,074 rupees. There's almost a difference of 100 rupees with the highest reporting EBITDA. But if we exclude other income from all industry players, we stood 5,812 rupees. Highest in the industry, and the closest one is Bestway that reports 4,858 rupees. So that shows the company's performance on per ton basis. Next. These are the tabular figures of first quarter 2025. Our gross turnover is almost close to the last year figures. Last year we reported 12 billion rupees. This year it's 11.8 billion rupees. Turnover is 7.890 gross net turnover against 8.7 billion of last year's. Cost of sale remained 5.4 billion against 6 billion rupees. Gross profit it's almost same as last year, 13.43%. This year we are reporting 2.4 billion against 2.6 billion last year figure. Again, finance cost has reduced from 950 million rupees to 493 million because we are paying debt, we are reducing our existing debt with the high cost to the low cost. By adjusting these figures, we have successfully achieved this figure of finance cost of 493, and we are confident that this figure will continuously reduce in coming quarters. After charging taxation of 653 million rupees, profit after taxation remained 1.022 billion against 933 million last year. Our EPS remained 4.5 rupees against comparative figures of 4.11, which is about 39 paisas higher than the last year. Again, it's tabular figure of industry of first quarter figures. Our net retention after subtracting selling expenses is 16,954 rupees, which is second highest in the industry. The first highest is for 16,955 rupees. Our GP is 5,997 rupees. Major reason is high royalty, which is imposed by the local government, Punjab government. But at bottom, our profit after taxation remains 2,210 rupees, and the EBITDA is 6,354 rupees, which is 4. Above us, Kohart is number one, Bestway is number three, and Chart is number two. So if we talk about these three companies, they are more or less they have projects in KPK, so they are enjoying less royalty. EBITDA without other income, our EBITDA is 6,238 rupees. Again, our position is third, and above us is Kohart is number one, and Chart is number second. So again, there's a big difference of royalty which we are absorbing now. Next. So that's all from my side, sir. Thank you very much. If there are any questions.
To the Q&A session. If you have a question, you can always put it in the chat box and we'll read it out to the management. Or otherwise, you can always raise your hand and you'll be asked to unmute, and then the floor will be open for your question. We have a question in the chat box. Sir, can I put it forward, Waqar sir?
Please.
The question is from Ali Jumani. He's asking, can management comment on recent hike in royalty rates? What's the impact per bag? An update on the case filed by the industry against it? And or do you believe KPK will follow suit?
No, I think, well, the royalty issue is a major issue for 4 or 5 units in this industry, especially in Punjab. This has been taken up at many forums, and we are still hoping that there will come a resolution within the next couple of weeks. The impact of the royalty is almost approximately around 1,200 rupees per ton. So you can very well imagine, if you look at our last quarter figures, we've actually lost 10% on the GP simply because of the royalty, which is a major impediment. Unfortunately, the other cement manufacturers, especially located in KPK, as well as in the other provinces, have taken advantage of this because their average royalty is around 250 rupees per ton. So we are almost between 963 to 1,000 rupees per ton higher than all the other players. So there's a large, unfortunately, inequality in terms of current pricing. So we are trying to address this issue with both the mineral department in Punjab as well as also the SIFC, and we hope that we'll come to a resolution. Several units have been impacted. As you know, DG Khan, Maple, Pioneer are the main operators. Then Westway, having a plant also in Punjab, has had some impact, and 4Gs also. So some of the other players, of course, Mohad, Jirat, then there's Lucky, and of course South. They haven't had this impact. So this is something which is seriously concerning us. We are addressing it. I don't know whether we'd be able to get a resolution, very, very soon. We've been trying for the last several months, and we have forwarded a proposal. Let us see whether we are able to achieve it. Because, this has, unfortunately created an imbalance in cement sector. So this is where the situation is, where it stands. So I think there is pressure from our side. To what extent we would be able to achieve this is something which is currently open. We are giving them some counters to try to equalize it or slightly higher than the other provinces. We haven't got a positive feedback as of today, but hopefully we should in the next couple of weeks. So I hope that addresses your, concerns about this, major impediment that we are facing. If there's any other questions, I'd like to take other questions. I mean, for instance, I would like to, you've gone through our presentation. clearly there has been certain issues, and you can really see that last year overall market shrunk quite considerably by 19%, and we shrunk even further. And there was a distinct reason. Previously, the market share was approximately around 9.3, 9.4%. And because of the expansion which came in last couple of years with 4G, Bestway, Lucky, and Maple coming into the market with additional capacity, and as they got allocations, obviously our market share reduced. And I think the last leg investment will be due, I think, within the next couple of days, which is Bestway. That will bring our market share down to about 7.6%. So we are slightly concerned about this, but as you know that we have been behind the scenes working, but obviously we are looking at how the economy will move. In my own assessment, I don't believe that things will progressively increase in terms of cement consumption. I estimate around maybe first July 2026. So the next year again, this current year is going to be very difficult. And I think the market will probably go down by 8 to 10%. But this also gives a little bit of an opportunity because obviously the population is growing, the demand supply imbalance will take place. We believe that we have planned, and hopefully in the next 7 years, we would hope that we will continue to, gradually, depending on the economy, continue to expand our capacity. We're going for a brownfield project because obviously now the pricing plans it doesn't commensurate in terms of the current income per capita in the country. So we are looking at maybe having a brownfield expansion. And subsequently, we have two leases, one in DG Khan and one in DI Khan. So we will move step by step, and hopefully we will add over the next 7 years another, depending on the market, around 7.5 million tons to our existing capacity. So that is our plan. I mean, not really officially, we are just doing, background work in terms of what we propose to do because the structure is going to be very, very different. We are not going to do what others have done in the past. We will manage a lot of the EPC and other things ourselves, and we will build the plant like a Lego. It will be slightly different. So our structure is slightly different as compared to what competitors propose to do in the future. So this way, we would hope that we will keep at least a line in terms of our market size and hopefully be able to secure better position than in other industries in the cement sector. So that is our plan. So rather than looking at things which we have been, because a lot of the cement manufacturers have diversified and they have a lot of other income coming in, we've been looking at other possibilities of trying to position Pioneer so that we can create better value for our shareholders. But we haven't yet been fortunate in terms of getting anywhere. I think a lot of you know, we have formed a consortium in terms of trying to bid for the national carrier PIA. But unfortunately, we pulled out of that. And there were several reasons behind it. As you know, that we also very large in the power sector, and because of what has been happening in the last 6-7 months in terms of the IPP, we decided to go forward. That was one of the reasons, and the other reason, of course, was that the government was not able to fulfill a lot of our demands because they didn't have the clearance with IMF. So if we do find other opportunities, we will try to expand as much as we can, and hopefully, what we've achieved last year, I think, as a medium-sized cement manufacturer, in terms of our attention, in terms of our cost, in terms of our strategy, in terms of our fuel mix. We will continue to add more efficiency. We hope that this year we would be coming close to about 90% utilization of local coal and 10% maybe Afghan or imported coal. We are also looking at the possibility of reducing our current grid utilization around 14%. Last couple of months, we brought it down to 3 to 4%. So we're trying to be efficient. Then there is another issue. The issue is the offtake is very, very weak. I mean, if you combine our entire lines that we have, we can produce 16,000 tons, and our average is something like 6.5, 7,000 tons a day, which means 6 months of the year our plants are shut down because our load factor is between 35 to 40%, which clearly implies that our fixed cost during that period goes up to something like 2,400, and effective from 1st of July, and you can very well notice that especially on documented industries like cement, we have been burdened with across the board with FPD has gone up, there's sales tax, there's super tax, there's withholding tax, there's Punjab revenue tax, and then on top of it, the royalty comes in. So literally, we are definitely working in terms of contributing to the GDP, which we do, but the returns, unfortunately, for the size and the investments that we've made over the years, really doesn't. Of course, capital markets also. I think my break-even cost is at 201. My current share price is at 180. And then if I propose to put another plant of 2.5 million, it will cost me approximately between, 200, between 175 and $225 million. So the return unfortunately not there. And as you very well know, the construction industry last year and a half or 2 years has not been doing very well. People don't have the income per capita. So until the economy, the stability, the politics, and things like that improve, we believe, IMF is not a solution. Will completely change the demography of how we operate in this country. I don't, see, of industries to really get to a certain sizable level, as compared to, let's say, Indonesia. I mean, I can't compare us to India. But anyhow, I think we have no other choice because we are documented. We have to continue expanding. We have to continue growing. If we don't, it's unsustainable because there's an unregulated market. And, if we have to maintain our status as a group, country, then we have no other choice but to continue diversifying. As you very well know, one of our companies is now bringing EVs. So we'll now look at things which will enable us both support the consumer as well as the changes that are taking place globally, wherever we fit in, because Pakistan, unfortunately, is still a third world country. We have opportunities, but we don't have the right governance. So until the economy really, the right people at the helm, we not really foresee, project trajectory one would expect from a 250 million populated country. So I think, I think I've summarized a lot of things. you can look at our costs. Our cost of sales also last year was below, was best in the industry. Although our devaluation, but the inflation is very high. I mean, if you look at cohort, it's 500, ours is 1200. If you minus that, costs have been, so we've improved wherever we could. Uh, we had impediments in terms of imports because of effects not being, we adjusted ourselves, not only in the cement industry, but other industries like, for instance, dairy also. We used to import a lot of SMP, which we don't. So we've tried to adjust ourselves and we'll continue to do that. And we definitely have no other choice to continue growing. And I hope that I will try, my most as long as I'm here to be able to create as much value as I have done in other entities also in the country which are public listed. And I would hope that I would be able to, make sure that people that have given me the fiduciary responsibility of investing with us do get adequate returns. So we will continue to strive and we will continue to see how best we can position ourselves as, a leading player in industries. I mean, we are mostly leading players in most industries, but we will continue to try to, focus and try to adjust and try to see what best we can, looking at the global changes that are taking place, especially in a lot of industries with digitalization and AI coming. We will use these technologies to improve the way we operate. Any other questions?
Thank you, sir, for the detailed response. I'm sure it answers a fair few questions that the participants must have. Uh, Moving on, we have a raised hand from Sarmad Masood. Sarmad, could you please unmute yourself and introduce yourself first and then move forward with your questions?
Assalamu alaikum. Am I audible?
You're perfectly audible. Please go ahead.
My name is Sarman Masood. I'm a financial analyst at Maple Leaf Capital. It's great to see the top management addressing investor concerns firsthand. To start off with, my first question is, what is your current retention price per ton?
So currently our retention is around 16,886 rupees. It's dropped from 17,990 in the last 6 weeks. And the reason behind that is, of course, there's been a lot of disparity in the market because of this royalty issue. That is number one. Number two, if you notice last year, we had actually reached about 90% versus paper bag into PP bag. Currently, because of this disparity which has taken place, we've seen a lot of overflow of cement coming into central Punjab, and a lot of the manufacturers have their own paper producing units, and they have a lot of inventory available. And, unfortunately, especially in the Lahore region, which is our premium market, in the last couple of weeks, we've had to shift from PP bags because Maple decided a couple of weeks ago that they were losing market share. So we have enhanced paper bag consumption, by almost about, in that particular area, not by 100%, but, in the region of Lahore, approximately around 40%, which means that our paper bag now consumption has gone up from 10% to almost about 25 or 26%. And I'm not very happy, but anyway, let us see. They have committed by December that they're down. But over the last, 6 weeks, the market has come down. So if you ask me, about 6 weeks ago, we were almost at 17,996. So we've lost around 1,000 rupees a ton over the last couple of months. And there are issues because there was smog, there are climate issues, now of course there are dharnas. So there are coupled issues. And of course, people have the advantage in other provinces. So, the advantage of a royalty of almost 1200 rupees a ton, obviously it enables, other players to take advantage of this. So unfortunately, we're in a disadvantaged position. We still, maintain most of our markets closer vicinity to our plants. That's why our retention has been maintained. I mean, if you look at maple, of course, you'll see that retention is higher because they sell white cement, and because of white cement, you don't have a sales tax impact, so automatically that goes up. And then in 4Gs, you'll always find a lot of transfer pricing because they're selling it to 4G units like FWO. So realistically, the analysts also need to understand that every the 6 or 7 or 8 cement owners, they have a different kind of demography. So analysis should really be based on how efficient we are within the parameters that we are operating. As we are not a very large unit like Bestway or Lucky or 4G these days. But hopefully, we'll get there. So anyway, I hope I've
Definitely.
answered your question.
So that more than answers my question. Moving towards my second question, could you please share what your current weighted average fuel cost per ton is?
Currently, our weighted average, there are two factors into it. It's around between 34,500 and 35,000 currently, because we are using 90% local coal, which is Darra and Afghan coal, and we do a mix and match on that. But I think with the duties of Afghanistan coming down, I would hope that the impact will come down to 4,000. My target, of course, is to have an average combination which will bring my price between 29 and 30. So, we are working on that, but then there is a Darra Balochistan strike, so there's transport issues and other issues. And of course, my competitive, even though we try to push them not to be too aggressive in terms of buying, because obviously imported coal is cheaper, but we prefer not to buy imported coal because I'd rather not spend foreign exchange if I am able to get the prices right here. So I think unfortunately, it's a lot to do with politics. It's a lot to do with stability. But right now we are between, as I said, between 34 and 35, 90% local 10. I don't know how long we can sustain that, because again, in the last couple of days, Pakistan is a problem and transportation is an issue. So keeping in view, yes, my target is 29-30. Let us hope I'm able to achieve that. I hope I've answered your question.
That once again more than answers the question. Could you please share what your current power mix is?
So our current power mix is that, as I mentioned earlier, currently we are from the grid, approximately around 3 and 4%. So I would hope to mitigate that also in the next couple of months. But last year it was approximately about 14%. So if you look at CBUs that we have in the 40 megawatt power plant in WHR, most of them is the mix of that. The WHR is giving us around 9.5, 10 megawatts, and then from our coal power plant, we're using both the CBS. But unfortunately, we can't use both of them because at times we can't use both our cement mills. The uptake is very, very poor. When we use our cement mills, then of course we can go up to almost 30, 31, 32 on our coal power plant. So this is our mix. We don't have any solar. And I don't intend on putting solar for the time being, because I think the prices will come down and we need inverted battery backups. And I think the capex is too high. And unfortunately, the land prices in where we are located now are tripled. So if I need to get additional land, I'd rather put a plant than spend the money on putting a solar unit. So I prefer to use coal power plant So if we do an expansion, we will still go for coal and we will go for WHR.
Sir,
Hope that also answers your question.
yes, sir, that does. To sum up what you've said, from WHR, you're getting 9.5 to 10 megawatts.
Four, and the CFB is 59.55. Now I've cut the WABDA down by 10%. So my WHR is improved as well as my CBF, which is almost around 65%. So I've done a lot of improvement in my coal powered plant. And therefore, my CBFs are producing almost 60%. Right. But of course, I'm not running my line capacity, right? So, so that's another issue, as I mentioned, on my cement mills. I need to run both of them and produce 12,000 tons a day, which I'm not. I'm only producing about 6.5. So that keeps varying as far as the CBFs are concerned. I hope I answered your question. It's a little technical, but anyway, it should suffice, I think.
Yes, that definitely does. Thank you very much for your time.
Right.
Thank you, sir, for your detailed responses. We have a fair few questions in the chat box, but given your detailed explanations and the presentation, I think we have more than answered the lot. I think there's one pertinent question that I'd like to put forward, and that is with regards to the fact that the company's strong cash flows generation and long-term debt of only 6 billion. What are your management plans for the excess liquidity that you generate? This is the first part. If you can answer this, sir, I'll move on to the second.
Okay, so I mean, I would rather get rid of my debt ASAP because in the last couple of years, the average has been about 20%. So, I don't want to give that money there. Now, if you go back to what I started with, that of course we have plans over the next 7 years to continue, developing and expanding, right? So if we are looking at Khushab, we are planning another 2.5, and DG and DI. I mean, this all depends on the economy. So this excess liquidity, because I don't want to take any more debt. I will use this money through my cash flows to reinvest back into the company and grow the company. That is our plan. The plan could change, but however, this, right? And as I said, additional income. Yes, we've completed our building, but we have all our own companies. So one of our companies, Halib, gives a little bit of income, but the cost of the way our building is, it's fairly expensive. It's a smart building. So really, that's not much of a revenue. So I hope I've answered your question.
Perfectly well, sir. Thank you. The second part of the question says, does going for expansion still makes financial sense in terms of ROE and NPV, given the recent devaluation of PKR and resulting high cost of expansions? It further goes on to say that other players have already expanded, so they are in a more advanced position compared to Pioneer Cement.
No, this is not correct because, during COVID, we did not take any turf. We did not expand, and all the companies that have expanded, unfortunately, the market shrinking. I mean, if you go back 3 years ago, we were doing 3.4 million tons. Today, we are doing 2.2 million tons, and God knows whether we'll do 2 million tons. So they've done expansion, they've done whatever they had to. But if you go back to my initial discussion, in terms of giving an overview, I clearly mentioned there that we are trying to change our model in a manner which will enable us to make any expansion viable in the future, which means we are going to do a lot of things which are going to be a lot different. And if you know very well that when we put up our line 3, we line 3, which was a hybrid model, which was effectively, if you look at it, several other units followed suit, including Lucky and many others, because it was a European mix and match. So this time, you must remember my experience, right? Because, we don't have just cement, container terminals, we have power plants, we have dairy. So of course, we are putting an EV plant. So with all this expertise that we have within the group, we will create a synergy whereby we will bring a cost, which will enable our civil works to be less, which will enable us to, control our EPC. And we have formed a team that has been working for the last 1 year on the blueprint of what we will do to ensure that we put a plant which is going to be far, far cheaper and efficient than any plant in the country, hopefully. Okay, I think I think in between my discussions and words, I'd already answered a lot of questions, but that I hope has clarified my position.
Most definitely it has, sir. Thank you. Uh, I have another question which says, sir, that at present there is huge surplus capacity in the industry and potentially more is coming in next year. So, what impact do you see it having on the retail prices, given that there is huge capacity?
Well, I think capacities which are proposing to come will come after another 15 months, right? I mean, if you start today, I think nobody has opened a letter of credit yet. Maybe they're doing a little bit of expansion internally. But yes, there are some players like myself with Pioneer and maybe Chirart and Kohart, which need to expand. So I think even if they start today, it will take them 15 or 20 months. So
Recording
again,
stopped.
hello, can you hear me?
Yes. We can hear you.
So in any case, the overlapping situation will bring you to 27. And as I said, that I see that,
Recording in progress.
if everything is going as I anticipate, based on the economy and based on our political situation and based on where we are. So, I mean, if you plan from, if there's expansion coming in from the 1st of July 2026, then, by 27, hopefully it should be, you should be able to absorb it. Because if you look at it, most of the players don't have one line, they have several lines. A lot of the old lines are not as efficient, and because there's no demand, they're not utilizing them. So if you bring in efficient line, automatically you will then be able to be more competitive in terms of being more efficient, and hopefully you will pass that on to your consumer to volumetrically grow. So that's all I can assume. I don't have a crystal ball, but yes, if expansion comes in, we are in line and doing this. We've been doing our homework, but we have to look at the right time. So I hope that should answer your question in terms of what you expect us to be doing.
Thank you so much, sir. We have a couple of questions of our own, if you don't mind us pitching
Sure,
in.
sure.
Perfect.
Yeah.
Mehruz, please go ahead.
Yes,
Am
you will. Yes, you will.
I audible, sir?
Yeah, what are your questions, please?
Sir, very basic questions. We have seen that Afghan coal prices was historically were priced as a discount of 18 to 20% as compared to the imported Richard Bay coal. Given the past couple of years, the prices have changed a lot. The recent duty reduction from the the Afghan government, there is an expectation that the prices will go down by 4,000 to 5,000 per ton. In the long run, what's your view on that? The pricing regime between the Afghan coal and the imported Richard Bay coal. That's the number one question.
I mean, you're right that the duties are expected to come down by 4,000 and 5,000 rupees. As I had mentioned earlier, I would hope that I would bring my price down. But you have to look at the global phenomena, right? I mean, unfortunately, the largest country that utilizes coal, and now that winter is coming in Europe and other places, there has been substitution, of course, in terms of clean energy. So there's a lot of different mix of different energies now being utilized in other countries. So the consumption of coal based on the economic outlook globally, especially in the first world, I would expect that the consumption will definitely not be the same as it may have been in previous years. And keeping into account that the instability in terms of commodity prices, especially coal, will not be so volatile as it used to be, because, come December to March, the prices would go up. Now, I would hope that the Afghanis, start realizing that, there will be no buyers for their coal if they don't align themselves with international price. Now, again, during winters in Afghanistan, there is also a problem, in terms of transportation, etc. So they could drag their feet. If I look at today versus last year, the same time, currently I would say about 40-45% of the cement players are importing coal. So the consumption of coal coming out of both our local as well as Afghan has come down. And on the other side, if you look at the power sector, the demand has gone down. So the local coal against imported coal, right? And the utilization in the power sector has also gone down. So, all across the board, as Pakistan, the utilization of coal, because the economy is not moving forward at 2.5%, you can't expect, the consumptions to go up. And our plants are running at 35, 36, 37%. I would expect that, if there is prudence between my competitors, that we would be able to bring the price down. But unfortunately, there are some people, I don't want to name my competitors. I don't like to do that. They don't have a very, very close eye in terms of how their operations are managed. So I think they to unnecessarily, demand, which then gives the wrong message, and therefore the price doesn't come down. I hope I've answered your question.
Sir, one last question from my side.
Mm-hmm.
Sir, I personally had a discussion with various cement, manufacturing companies, management, senior management. The topic was on LC3 cement.
Sorry?
LC3 cement. So targeting on the net zero emissions and those kind of stuff. Some of the companies management have comment that the setting up time for that LC3 cement is quite few days as compared to the current cement. Just your comment on the new technology which I mentioned. What's your view on that? That's all from my side. Thank you so much.
Right. To be very, very honest, right? Because my capacity is not so large. People who have 15 or 20 million tons, they can venture into this. With my current, selling OPC, I have a good, decent market. Yes, when I expand, then I will have to look at other options like, for instance, Best Ways. They have several, because when they bought Lafarge had, different, then Lucky recently has brought a lower grade cement into the market, which is used, in areas, in remote areas where people can't afford a bag of cement. But this is something that you are asking. Unfortunately, we are a third world country, and unless and until we become smart, we become at least a middle income country, the consumption of this level cement will not be locally utilized. Now there could be a possibility of exports, which I haven't really studied, so I really cannot comment on this. when the time is right and there is something which relates to export, like for instance, sulfur resistant cement, we did many years ago. We will look into this and we will see that if there are better margins, then we will participate. So we will continue to internally deliberate on things which will create value. So, since I'm not technically that savvy on this particular cement, I really don't want to comment on it. Maybe the next time when we have a meeting, I'm going to go through and read and then come back to you on this.
Thank you
Because
so
the
much
other
for your
cement,
response.
the other people in the cement business, some of them just, I mean, they're far better than me. I'm a new player. I've only been in the market for 20, 25 years. They have been there for 50 years. So I'm still learning. So if you have any information that can assist me, please drop me an email. I'm a very inquisitive person and I like to read and I like to learn. So I hope I've answered your question. I don't want to give you a reply to something I'm not very familiar with.
Perfectly well, sir. Thank you so much for your response. Just one last question before we move on and conclude the call, which is with regards to the payout. A lot of people are very interested in payouts, given the last year was a very healthy one in terms of the fact that you paid out roughly two-thirds of your earnings. So, any color, if you could please shed on the payout for the next foreseeable future, please.
So, I mean, in principle, I think you know very well, we have not one listed company. We have another very large listed company. And you can look at the reflection of the dividends from that company also. The reason that we had intermittently not been able to provide dividends previously was because of two or three reasons. One, that that the interest rates spiked very high. That was one reason. And the other reason was that we had to bring our debt level down to a certain, position, getting the ratios right and having that kind of liquidity. Now, inshallah, God willing, if this royalty thing goes away, then I think we will incrementally add another 10%. And hopefully, we will keep enough in our reserve to expand. And of course, it is my responsibility that I must give people that have invested in the company a return, and I will try whatever best I can, whether it be quarterly or every 6 months, to try to compensate our shareholders. So you want to speak on that? There was a stop because COVID came in, plant came in, high exchange rates. There was a lot of problems which we had to sort out, and and to stabilize the plant and to become efficient. Efficient, I like to benchmark myself in terms of having the best cement operating unit in the country in terms of retention, in terms of cost of sales, in terms of EBITDA, in terms of market share, everything. So I'm a little particular about that. And if you look at my history, I mean, you know, since it's a public listed company, it is my fiduciary responsibility on behalf of all my shareholders to do whatever best I can to make sure that their company remains sustainable and also to make sure that they get a return on their investment. Unfortunately, the capital markets have given a lot of people very good gains on our shares, in terms of what it was and what it is. So one would also hope that the capital markets appreciate a company like ours, who, we don't, go and, shine ourselves by creating, these optics and things like that. But you can see my break even is at 201. My assets are worth 85 billion, yet the market believes my company is worth 35 billion. So there's something wrong somewhere. But anyway, that's part of life. It doesn't really matter. But as far as I'm concerned, whatever best we can, whether my share is zero or otherwise, my shareholders will definitely be taken care of as long as we believe that we are doing things which will allow us to grow and remain sustainable. I hope I've answered your question.
Perfectly well, sir. Thank you so much for your detailed response. In the absence of any more questions, and given that we are already past the hour mark, we can conclude the session. But before that, I would like you to give any concluding remarks if you might have, sir.
Basically my concluding remarks is that all of us need to go and, somehow or the other, get ourselves out of this, this unfortunate mess that has been created over the last 77 years. Try to get the right people to govern the country so that, our economy can improve, our people's well-being can improve, and industries flourish, and jobs are created, and everybody, gains out of this. That is all I can, hope. At my age, that's all I can pray for. But I don't think it's going to happen in my lifetime. But anyway, so we all need to put in our two bits to make sure that somehow or the other we move this country out of this mess and become at least a reasonable middle income company in the first leg, and second leg to start moving towards the developed country technologies and all. And I hope that we would be doing the same in all the industries that we have, rather than buying old technology to buy new technology and use, the advantage that we have in terms of the young population, especially on the service sector, especially with AI coming in and digitalization. We use them as tools to improve the way we operate and attract people to come into this country and invest, not only for our manpower and labor, but because of good infrastructure and the availability, which would give them better returns what they could get in other countries. I think that's all I can, include by requesting everybody in the market, irrespective of myself, but all of you, we have to work collectively for generations and yourselves to have a better life and a better way forward for coming generations. Right?
Thank you so much, sir, for your valuable insights. With that, we can draw this session to a close. We wish Pioneer Cement the very best for this year and moving forward. Ladies and gentlemen, that brings us to the conclusion. You may now disconnect the call. Thank you so much, gentlemen.
Thank you.
for your time.
Thank you. Thank
Recording stopped.